Hey, welcome back. This is a special episode of the Small Business Mindset podcast where we actually bring you into the commercial real estate world. We hosted a special presentation about small business lending recently with some of our lending partners and clients, and we filmed it. And so I encourage you, I'm going to put it in the show notes, go over to our YouTube channel and check out that video because I think there's a lot of helpful insights into understanding that loan program. I wanted to provide a few takeaways as we are thinking about what that means to our business, because I think at some point in your business cycle, you are probably going to need to apply for a loan. That might mean you are not necessarily going to buy a building for your business, but maybe you need to buy equipment or inventory or apply for a line of credit to get you over those times. Or maybe you're expanding and you need to bring investor money in. There's lots of different reasons why small business lending makes sense for you. The difference between small business lending and just conventional business lending is really one thing. It has to do with owner-occupy businesses. And what I mean by that is that if you own a business, you are eligible for SBA lending, regardless of your size. There are some programs that don't qualify, and we'll kind of cover that in the video and the presentation. But for the most part, if you're a small business owner, there's lots of fantastic programs available to you that might be a little complicated at first, but we hope we break it down for you. As you think about lending in general for your business or even you personally, I can't recommend enough getting organized and getting ready to present yourself. What I mean by that, number one, some key takeaways from our presentation with these two experts has to do with getting a relationship with your banker. Now, you might just have a checking account at your local bank or credit union. That's a great place to start. Get to know who handles the business banking side of that organization. Do they do business lending there? If not, who would be another great lending partner within your community that you can connect with? Build a relationship. Because many times when you apply for a loan or a line of credit, whatever you need, you have to submit paperwork that has a lot of financial information on it. But even better, when that person or that representative from that bank or credit union goes to present to their loan committee to approve your loan, it's wonderful if they can have some background and some context and they can say, listen, maybe their finances look a little lean, or maybe they had some hard times in the past, but I have a clear understanding of where this business is headed and how they're led by a strong person and they have some great hard work ethic and responsibility and dedication to their goals. That actually speaks volumes, believe it or not, over and above just your financial capacity. But number two, great takeaway too, is get organized financially. I know I've talked about this before, the strong, strong importance of making sure that you understand your financial picture every quarter, twice a year, annually. And these are updating facts and figures, making sure you understand where your cash flow is coming from, what current debts you have, what assets you have, and what other responsibilities you have in your financial life. Having that at your fingertips and updated regularly will allow you to supply that to your lender. So if you are applying for a loan, the number one thing they're going to have is your financial picture. They're going to need tax returns probably for the past 3 years. They're going to need a financial statement, probably from you personally as the business owner, but also for your business. Sometimes we're early enough in our startup phase of our business that we don't have a great financial picture, which is why they ask for your personal financial statement. And that can look like everything you own. Do you own a home, cars, other assets? What cash do you have in bank accounts? What investment savings do you have? What access to credit do you currently have? And what is the balance on those credit statements? Meaning, what is the balance on your credit cards? And what are you paying every month? They're going to look at a few things. They're going to look at your credit history, but they're going to also look at your debt to income ratio, which means how much debt do you have compared to the access of credit you have, and factoring in what kind of income do you have coming in to pay off those debts. So those are three factors to really consider. Most lending institutions, the lower the debt to income ratio, the better, because they don't want you maxed out on the amount of credit you have. So for example, let's say you have a credit card, and I'm just going to use a very simple example. You have one credit card and it has a $10,000 limit and you have that maxed out. I mean, you have you have no more room on that card. Not a great situation to present yourself in for a new loan. If you can find a way, maybe not to pay off the card exactly, but to get the balance down below, let's say 50, 60%. So maybe you only owe $5,000 on that credit card and you make doubly sure you are making on-time payments of the minimum amount of the payment every single month. because your credit history can be vastly impacted if you miss a payment. Big zinger to your credit report. Don't let that happen. But be mindful of that, of what that looks like. So getting organized, making sure you have information at your fingertips that's updated and that you feel confident in, and build a relationship with your lender. That there's a lot of great programs available that can help you move forward and expand your small business, but getting those resources first. Again, tap into our link below, watch us on YouTube, learn more about SBA lending programs. There's a lot of great information in there.